Let's focus on the economy for a bit, and for that we're now joined by an expert panel. We're now joined by Siddhartha Sanyal, who's the Chief Economist and Head of Research, Bandhan Bank. We are also joined by Saugata Bhattacharya, Independent Economist. Puja Mehra as well is joining us, who's the author and senior economic journalist. Thank you very much, Puja and gentlemen, for joining us this evening. I want to first come to you, Mr. Sanyal. Given what the RBI Governor really said about, GDP growth in the first quarter to be at 7.3%. But given what we've really seen as far as the GDP growth is concerned, given the commentary coming in from Fitch is concerned, S&P ratings is concerned, do you think that's achievable?
Broad macro parameters in case of the Indian economy seem to be on a very strong footing on most of the parameters. Growth seemed to be good, inflation coming under control, current account deficit, as the governor pointed out, is coming better under control, and the fiscal deficit numbers are good. And it's not a surprise that that particular confidence was there in governor's speech today. And that particular confidence is being reflected in many commentaries from various other agencies, including the rating agencies. So broadly, you expect quite a bit of positive run for the Indian economy for the coming quarters as well. And overall, all this, I mean, you can join these dots and actually paint a pretty positive picture, legitimately so.
Right. Let me now go across to the other panelists tonight. Saugata Bhattacharya. Mr. Bhattacharya, what is your big key takeaway from RBI Governor's speech? And is this the best macro setup that India has seen in years now?
Well, thank you for having me on your show. Well, yes, I mean, macros are quite resilient. And what is more remarkable, of course, I mean, the period of 2004 to 2008 was also equally strong. But remember, the global economy was doing very well at that point in time, which is unlike the case now. So in a situation where global growth is likely to be about 2.5% to 3%, India growing at whatever, 6.5%, 7.5% is really commendable. But I'm a little worried about the Q1 growth numbers, which seems to be even higher now than the RBI's monetary policy estimate of 7.2%. Because remember, with this heat wave now, the other parameters are quite strong. But everything that is exposed to the heat, particularly on the farming sector, construction, etc., there's a little bit of a risk that some productivity, some time at work has been lost. But having said that, the high frequency indicators that we track, the PMI numbers, the transportation numbers, etc., and particularly electricity growth has been really strong during this period, obviously for obvious reasons, air conditioners, etc. So let's see how this goes out, but we should be prepared for a little bit of a slowdown, and particularly remember the profit numbers that we are beginning to see we are likely to see in the first quarter. Is likely to be a little bit moderate compared to the previous numbers, which is something that feeds into the GDP, the non-agricultural GDP numbers. So let's be a little cautious, but otherwise growth remains very, very resilient.
Right. Very, very interesting points that you mentioned, Mr. Bhattacharya, overall on consumption, construction, and a whole host of other things. We'll, of course, come and speak about those issues and, of course, those topics. But let me also get some opening comments from Puja Mehra as well. Puja, do you agree with Mr. Bhattacharya on the fact that we should be a bit cautious? Or do you really think that with the base effect, in terms of what India has achieved as far as its GDP is concerned, can this 7.3% growth be achieved, or will it call for a revision?
Thanks. Sunita, I agree with what he has said, and I think the governor also spoke, although he painted a picture of optimism, but he also highlighted the need for a cautious approach. To that note of caution, I would just like to add that we still don't have clarity on some part of the growth which came out of the discrepancies number. So we don't know how that will play out as the revisions come. We also need to keep in mind that although the headline growth figure looks very strong, the agricultural sector, where a large proportion of the working population, nearly 50% of the working population is engaged, has a GDP growth of only 1.4%. I'm not sure how that will play out on the consumption side, although the governor said that they're seeing projections of rural consumption picking up. But I haven't seen any data as yet suggesting that. We know that for nearly 10 years, rural wages have been declining or have been in parts stagnant. So we have a lot of legacy issues, which, when we look at things from Delhi, we do focus on all of this, perhaps not as much when it's looked at from Bombay. And most of all, besides the numbers, besides the data, I also want to draw your audience's attention to the fact that we just had a Lok Sabha election in which we saw results where the BJP has lost its majority because it has lost some of the rural seats. I think all of that tells us that there is need to be cautious.
Right, and that should be, as far as growth in the rural sector is concerned, that should be priority for this government, even though it is a coalition government. At this point, let me come back to you, Mr. Sanyal. What is your view on the fact that the governor is saying that there should be a normal monsoon this year, and that should really perk up things as far as the rural sector is concerned, and which in turn could really also bolster consumption?
That's a very important point, undoubtedly. We tend to often oversimplify things in terms of just looking at the headline monsoon number. But I think there are further details that one needs to track, whether the temporal distribution of rains is good enough, whether the spatial distribution of rain is good enough. This year, at this moment, while we have seen that the overall forecast is relatively good and favorable, there are certain pockets of the country where there are concerns of relatively less rain or relatively less timely rains. So, for example, in certain pockets in the east and all, there are forecasts that rain will be little less and rain will be little delayed. Now, if that is the case, that actually comes in the way of a good agricultural harvest and all. So that's a perfectly valid concern, or that actually remains as a point that we need to watch for the next few months. Because of late, what has happened that apart from the general forecast and outcome on the monsoon front, etc., weather-related aberration, events of meaningful weather aberrations have increased very significantly. So we need to remain watchful on that particular aspect. Also, I think we haven't really discussed in the last 10-15 minutes another aspect, that we have not been able to be completely sanguine about the trends in global political developments and global geopolitical issues, which will also can potentially have some kind of an impact on the overall macro conditions. So obviously there are one or two factors like this, the weather-related concerns or the geopolitical concerns, which we need to be very, very watchful about throughout over the course of the next few months. Irrespective of the fact, the way we described in the beginning, that the broader fundamental momentum in the economy seems very strong, but obviously we need to be very watchful. Of late, what we have seen, that there had been some modest uptick in some of the consumption items, but given that consumption growth was just about 4% in the previous financial year, there is a long catch-up that consumption needs to achieve over the course of the next financial year. We need to be very watchful on that particular aspect.
Absolutely, and you bring out a very important point on how consumption really needs to be achieved, and that growth momentum really needs to be maintained. I'll come back to you, Mr. Sanyal, with a quick follow-up question. But let's first go across, take a look at what the RBI Governor had to say today, specifically as far as the rural economy is concerned and rural growth is concerned.
Rural demand. In the consumption side, rural demand, which was lagging behind for considerable period of time since the COVID, and perhaps in the first half of last year also, has also beginning to improve quite visibly. The rural demand, rural consumption has picked up, it has gone up. FMCG sales in the rural sector has also increased. The demand for NREGA labor has also gone down. The agricultural season also looks very optimistic because of the projections of above normal monsoon, southwest monsoon this year.
All right, so that's RBI Governor really speaking on rural demand, and he says, Mr. Bhattacharya, that rural demand that was lagging since COVID is beginning to improve. Of course, we're seeing green shoots. Of course, that's also being reflected in FMCG numbers as well. But would you agree with Mr. Sanyal when he stated that there is some sort of an over-optimism as far as rural growth is concerned? Do give us your sense of what are the other risks that that you think could pose for the economy, the rural economy per se?
So, well, yes. I mean, rural demand remains a bit of a mystery. There are some indications that rural demand is beginning to pick up. I mean, sales of two-wheelers, sales of tractors, fertilizers, etc. Plus the FMCG numbers that you mentioned, that the governor also mentioned. But one major driver, Siddharth talked about the rains, which is very, very important because the rains will pick up some part of rural production, rural output, rural sales, and that will feed into consumption, rural consumption. But remember, there is one major stimulus that will be coming in very, very shortly in terms of the budget. So there will be two things. Number one, you will see probably a sharper hike in the MSP numbers for the Rabi crop, for the Rabi season coming in ahead. So that will probably give one more booster to rural demand. I'm not talking about the current or maybe even the next quarter. So the first half. So in the second half, you are going to get some of these stimulus boosters. I'm sure you will see in the budget that the outlays for many of the rural-oriented schemes, programs, will be hiked this time round, whether it be rural roads, rural development, rural housing. You've already seen the increased outlay for housing, etc. Some more, I think there will be some further increase in the NREGA outlays, so that will also help. Plus, some of the other spends that the government are likely to do. So more money is likely to go into the rural economy, other central sector schemes and CSP programs, etc. So from the government side, other than these structural features, the rains, the other parts of the rural economy. And remember, the other thing that has changed in the rural side is an increasing reliance on cash crops, commercial crops, and that is more lucrative than the cereal production, etc. And that leads to more incomes in the hands of farmers. So all of these things together do suggest that rural demand is going to increase, which is also the commentary that we are hearing from the FMCG companies. But over what period of time remains the key issue now.
Right, and Mr. Bhattacharya, we'll of course come back to this discussion, and very interesting points that you've raised about the budget and how this time around the focus is going to be around giving a boost to the rural economy. And of course, we've seen the first two decisions that have been taken by the Modi government have been around housing and of course around this sector. But let's first take a quick look at what the RBI governor had to say on India's inflation trajectory and on rate cuts, and then we'll follow up with some more questions around this.
The biggest uncertainty is food inflation. The average food inflation has been 8% in the last 6 to 7 months. And that is slowing down the disinflation of the headline numbers. Headline still remains at 4.75 as per the latest number. And then in the second quarter, it is likely to go down to 3.8. But again, it will go up to 4.5, 4.6. So you are within striking distance of 5%. And if there are a series of weather events or something goes wrong on the weather front, the vegetable prices and other prices of the key vegetables, the prices may go up. The food inflation again may go up. International food prices, I talked about international metal prices going up. In fact, the global food price index has also started going up. So therefore, it could even touch 5%.
All right. So, of course, Governor Das stating that inflation is moderating, but he did say that we have to stay away from adventurism and not really adopt a very, very aggressive monetary policy. And he, of course, said that he is confident that the downward journey of inflation will continue. But very, very interestingly, Mr. Sanyal, he did point out to some external factors that could really sort of derail this trajectory. Or do you think otherwise, considering that Mr. Das also pointed out India's inflation growth trajectory and how we've been able to soften the inflation rate of growth or degrowth, given that there are two wars already playing out and that the global economy is not really doing as well as India is?
That's a perfectly valid point. If you see of late, as Governor also highlighted very categorically, that we get to see there has been some uptick in metal prices or significant uptick in metal prices of late. There had been upside growth surprise both in case of two major economies like the US economy and the Chinese economy, which led to quite a bit of uptick in expectation of, related to metal prices and energy price inflation. Not necessarily everything is already reflected in the prices, but some of the future prices have moved. So that is one particular point. Food inflation also, Governor was very categorical in mentioning. I would go back to the point related to weather aberration that we discussed earlier. That is not true today only about India, rather it's true across the globe. Also, in case of India, there had been certain prices within the food category which are more sticky in nature. For example, cereals, milk, protein prices, they have seen some upward movement again. So sequentially, we might have to be very, very careful about tracking the inflation numbers. There has been a relatively favorable base and statistical effect waiting for us. That's why, as the Governor mentioned, we might be hitting a sub 4% number in the next quarter. But you cannot be too complacent on the inflation front. Sequentially, some of the numbers might actually start moving higher relatively soon.
All right, so you're basically alluding to a cautiously optimistic stance. Puja, do weigh in on this question that I'm going to ask you next. Does that then present a case for a delayed rate cut scenario, considering that the Governor said that India is going to grow at a rate of 7.3%, and he also spoke positively about how inflation quarter on quarter has been coming down for the country?
I thought he made it very clear that he's not willing to make the growth sacrifice required to increase the pace of disinflation. He said that inflation is sticky, and I thought he said in pretty clear terms that we should not be making the growth sacrifice required to increase the pace of disinflation. So I don't think, we should expect a rate cut too soon, given the current trends.
All right. Mr. Bhattacharya, let me come back to you now. I think one of the key reasons for the country's growth in GDP has come in from the manufacturing sector, whether it's Make in India, whether it's the PLI scheme. That component has really sort of boosted the overall Make in India across several sectors. I want to actually understand from you on how that can really now be given a push, because a lot of commentators say that India has missed the manufacturing bus. Is that really the case, and how can then manufacturing be given a boost from here on? Because till now we've been focused on capex-led schemes or PLI schemes, but how can manufacturing be given a massive push?
So manufacturing has done fairly well, as you mentioned. Some select sectors, in particularly electronics, automobiles, now increasingly in defense. So there are plenty of signs that manufacturing is beginning to do well. But to be able to sustain this momentum, of course, I mean, there will be other PLI schemes that will come into probably more labor-intensive industries like apparel or toys or leather or whatever. So the export markets are likely to be a major focus for increasing manufacturing. So all of these things will work. But to my mind, if you need to push the share of manufacturing from the current 17-18% of GDP all the way, not just to the target 25% of GDP, which is very, very ambitious, but even to say something like 20-21% of GDP, I'm quite clear in my mind that the government needs to focus on the MSME segment of manufacturing, which is the small, medium, micro segments of manufacturing, because that will not just increase manufacturing growth, but it will also lead to what has been lacking in manufacturing, which is jobs. So although manufacturing has done well, manufacturing jobs have not. So if these two need to grow in tandem, synergize each other, the MSME sector will need to be particularly a matter of focus, and particularly from the export segment. Remember that a large part of our export push, remember that major from the 450 odd billion in exports in manufacturing, our target is $1 trillion by 2030, which is very, very ambitious. We need to be integrated in the global value chains, and to be integrated in the global value chains, we need to integrate into our domestic supply chains. And that will need a large focus while all the rest is going on. The high tech manufacturing, etc., is being encouraged, semiconductors, computers, electronics, etc. But together with that, there needs to be an equal focus on those segments of manufacturing and down the value chain, which is likely to lead to further employment, because that's also critical to sustaining consumption, which is the other weak point in our growth story that we have seen so far.
Definitely, definitely. And you bring out a very interesting point on jobs, and we'll come to that a bit later. But let me also get Mr. Sanyal's reaction on what you've said. So Mr. Sanyal, Mr. Bhattacharya, of course, says that MSME segment, that needs to be given a push. Of manufacturing has to become 20 to 21% of the overall GDP. But I think one of the other big issues as far as manufacturing is concerned is the domestic value addition, which again, as Mr. Bhattacharya was stating, that it will end up, of course, supporting the MSME segment and value addition locally if we are to become a manufacturing powerhouse. What really should India do as far as firing up local value addition is concerned? Because as of now, as many critics would have pointed out, that it is compilation, it is aggregation, and not really manufacturing in the true sense of the word.
Well, I think Saugata summarized it brilliantly. First of all, very clearly, manufacturing of late has done reasonably well. If you see how exactly this particular sector has moved, it might not be that encouraging a picture if you try to see in terms of the share of manufacturing in overall GDP. And I'll necessarily not target a much higher share only in manufacturing, because I'll try to rather align my economy with the existing competitive advantages of the economy, which might very well be with the services sector, which might very well be in case of agriculture, there might be a few low-hanging fruits. I would rather try to focus on that particular area. I think Saugata brought out another very important point, that the big focus area of manufacturing often is because of its ability to generate blue-collar jobs. In case if you really want to get it in a more accelerated pace, you need to focus more on MSME sector, which is also a very clear, very important takeaway for this particular sector. Now, very important factor here is the flow of funds or credit flow, etc., from the financial system, in formal financial system, into the hands of MSME. That particular pipeline needs to be maintained and managed very well. I think we are doing relatively well on this. The big optimism here I would take from India's greater integration with the global supply chain. And over the course of the last a decade and a half after the global financial crisis, we had seen a wave of deglobalization. It's very important to see whether we see a similar movement in terms of policy formulation or political ideology globally. If that is not the case, it will be more beneficial for some of the exporters like India, both in the manufacturing and in the services sector going ahead, where the efficiency gain is very significant. Moving up in the global value chain has been very significant, and we should be in a position to take better advantage of that over the course of the next 5 to 10 years. Question is, we need to be very, very watchful about how exactly political ideology and policy in the global sphere shape up over the course of the next few years or next 1 decade. We are in a very advantageous position in terms of our digital, public digital infrastructure and some of the other areas. Hopefully, we stay on the right side of that particular aspect.
Right. Mr. Bhattacharya, let me come to you. And of course, taking from Mr. Sanyal was speaking about, and that is the issue of job creation. Many economists have, of course, criticized India's growth story, and perhaps rightly so, that this has been a jobless growth scenario for the country. Now, while I understand that startups and SMBs and MSMEs have created jobs to some extent, but how can the country now create large-scale job creation so as to take advantage of the demographic dividend that India really has, that everybody talks about?
So absolutely. I mean, Siddharth got it on the ball on this. So one part is on the services side, we are beginning to create jobs via the global capability centers, the GCCs that are now beginning to come in as waves and into the country. Almost all MNCs now have their service centers in India. So that has created fairly high quality jobs. And down the line, I mean, in tier 2, tier 3 cities, also these GCC centers have been set up. So that's been helping to create jobs. But the next round, I think, for job creation, I think a very important component will be to design an apprenticeship program, which one of the political manifestos talk about. So that I think the government has to provide credit or financial support to corporates to enable an apprenticeship program to draw people and skill them so that they can then begin to add into the value chains, they begin to add value to manufacturing and services both. So to get the next round of jobs going, my own sense is an apprenticeship type program, well-designed apprenticeship program will be a very key component for the next round of job creation.
Right. So you are saying that in addition to SMBs and startups, of course, an apprenticeship program is something that the government should be looking at. But a final question from you, Puja, before we wrap up this discussion. Governor Das also spoke about being future ready. RBI should be future ready. India as a country should be future ready, which sort of brings in some sort of an uncertainty as far as the digital economy is concerned. But this is also the space where India seems to have performed well with respect to digital public infrastructure, UPI apps, and you know how the rural economy, the not so connected, have really been included as well. So in that sense, it's been an inclusive growth story as far as the digital economy is concerned. And we're seeing how many other countries are also looking at adopting India's payment models, digital public infrastructure. I want to understand from you, how can regulators now think of enabling more of these digital first infrastructure platforms, especially so far as credit creation is concerned?
Well, letting the market operate exactly how Governor Das said. I think he was asked the same question and he said exactly this, that the market should be able to operate so that whoever has a good, I mean, he said, didn't say this, I'm interpreting it to be so, that whoever has a good business model should be able to be successful and cater to the demand for credit the way they provide. But you talked of inclusive growth and you also talked about the rural economy. And I'd like to add here that because we are able to provide the digital payment mode to the rural economy, that isn't enough for growth to be inclusive. For growth to be inclusive, I think we need to do what the other two panelists are saying. We need to make sure that people in rural India are able to participate in the growth process. They are able to do it not because they are going to get NREGA jobs or because they're going to get welfare giveaways, but because they're going to have jobs, because they're going to have jobs where with their low levels of skill and training, they can still have earnings which are predictable and which are not short-term. And for that, I think apart from focusing on SMEs, we need to create the ecosystem for labor-intensive industries such as textiles, leather goods, etc., to be able to employ lots and lots of people. So whatever it is in our duty structures, whatever it is in our operating environment for and ease of doing business, that is not allowing our textiles industry, our leather manufacturers, products of this nature to expand quickly, become competitive, and also export, because we can garner market share in exports. The global economy slowing down is no excuse for us to not be able to do that. That, I think, is what will make the growth process inclusive.
Absolutely. So you're saying that doubling down on exports, and of course, perhaps India could also look at doubling down on services exports as far as that is concerned to bring down the current account deficit even further. Thank you very much, Puja and gentlemen, for joining us this evening and sharing your thoughts on Governor Das's comments at ET Now's summit, at ET Now Summit, where we were celebrating 15 years. Lots of interesting points that came out. Of course, Governor Das seemed optimistic as far as the inflation growth story in India is concerned. He said that inflation is slowing, but yes, of course, there's no need for adventurism. We need to stay on the course. He was also very bullish on the rural growth and consumption story.
If you like this video, then like, share and subscribe to ET Now.